Stocks break higher from an inside week. I'll explain what an inside week is. Junk that is already at records. This is good for stocks. We'll explain why. Dr. Copper approves higher stock prices. Again, I'll explain why Dr. Copper and why copper is important for stocks. Chinese stocks rally on US sanctions. I'll try to explain why that is happening. And again, we will look at Bitcoin and Ethereum as it approaches very good buy point, but should we be buying it? All this and more in today's edition of MasterChartsTrading.com market recap for Friday, May 3rd, 2024. As always, please remember to hit the like button, subscribe to this channel, share this video. If you have any questions or comments, please make it in the video section below. Again, thank you very much for all of the comments and the likes I've been getting. It truly means a lot to me. Again, please keep those coming. If you are a subscriber, stay tuned. We will cover quite a bit of various securities. Market breadths will be covered in the members only section. Cannabis also will be covered in the members only section. Big news for people who are care about cannabis is that this week United States Drug Enforcement Agency and FDA, Federal Food and Drug Administration, has reclassified cannabis as controlled substances 3 versus controlled substance 1. So now cannabis becomes on par with anabolic steroids in the danger department. It should have been legalized completely, but that's just my opinion. We will also cover some of the large cap stocks like Apple, Meta, PayPal, and Target. As well as you can notice that we'll have quite a bit of Chinese shares now. Bilibili, JD.com, and some of the other one, I think this RLX Technologies. So stay tuned for that. If you're not yet a subscriber, consider signing up by going to MasterChartsTrading.com. I will be using also my proprietary indicators, which you can see on this chart, this green, blue, red, and yellow lines throughout the presentation. You can sign up by going in the description and following the link. Let's look first at the weekly chart of S&P 500, and there it is, weekly chart of S&P 500. So last week I pointed out this formation. So notice this large red candlestick and a green candlestick, and also notice that the entirety of the green candlestick is within the range of this red candlestick. So this formation, this green candlestick, is considered now an inside week. Well, because it's inside the previous week's range. You can have also inside days, but when you have inside week, they are more meaningful. I also mentioned that a breakout either way out of this inside formation will determine the next few days to few weeks of the price action. And I said that a breakout to the upside will most likely we will challenge the records, and if we break down from this formation, most likely we'll be touching this blue line at around 4,800 or so. I think currently we are breaking to the upside. At least we are now higher than the previous week. Ideally, we should be above the red week, which is the week of April 16th. We haven't yet gotten it, but so far I am moderately optimistic that we already are seeing this breakout. So overall, the picture for stocks is still bullish, and I think if I'm correct and this breakout has already occurred, most likely we will re-challenge the highs. So looking at the same chart but now on the daily time frame, so each candlestick is a day's worth of activity. Okay, so to change that, you see 1 day. If you're using my indicators, these lines which you can get on your chart, make sure the length is 250 for daily. So daily chart use 250, weekly use 52. Okay, so this is a 52 on the weekly chart. So each candlestick here is a week's worth of activity. Looking at the daily chart of the same S&P 500, we are rapidly approaching this white line that I drew in a few weeks ago. So notice this low from April 4th, and then right there on April 12th. So that's April 4th right here with a bearish engulfing pattern. So this red candlestick engulfed the previous candle from Wednesday the 3rd of April, and then right there where I'm hovering on April 12th, the Friday, we broke below this low, and this is, and you can see that we just kind of collapsed afterwards. We had 1, 2, 3, 4, 5, 6 days of red candlesticks. I was already getting kind of antsy around April 19th, last Friday, or rather Friday before that. That was correct. Now we're seeing a bounce. So what I really like about this is that we're number one above my green support resistance line, which makes it more likely that we will be continuing higher. There is also today on Friday, the 3rd of May, notice that we gapped up relative to the 2nd of May, Thursday, from yesterday, and we're currently at the highest level since April 15th. So by and large, this is very good news. Excuse me. Now we're approaching this support break, and most likely we will see some sort of a sideways trading and possibly an attempt by the bears to try to push the prices lower. Question is, will they succeed? And I am not 100% of that, obviously, but if we, I mean, I have a pretty strong bullish bias right now. I think we are obviously in an uptrend. This is up arrow. Back in November, I bought S&P 500 ETF SPY right around that area. That's my position right here. I bought on the 23rd of October, and I'm still holding half of my position. I sold half in January of this year. I'm still holding half of my position. We could continue higher. It's entirely possible. What gives me quite a bit of hope is that even as S&P 500, I just showed you, S&P 500 is approaching this resistance, potential resistance. I'm not sure it's going to be real resistance. Potential resistance from support break that occurred here on April 12th. Even as the S&P is approaching that level, high yield bonds, or also known as JNK, ticker symbol JNK, is already at all-time high. Okay, to confirm that it is indeed an all-time high, we'll go to weekly charts, and I'll show you that indeed we just hit an all-time high. This is a high exceeded, the recent high we just hit exceeded the December 2021 highs. So we're at the all-time high for high yield bonds. Okay, so high yield bonds correlate highly to S&P 500. Let me just show you the correlation coefficient. So down below here is S&P 500, or rather this yellow graph down below here is a correlation of high yield bonds, JNK, to the S&P 500. And notice that if we go back, it's by and large very positive. Oh, very, very rarely we have a negative correlation where S&P 500 and high yield bonds do not do the same thing. But currently, yes, they are indeed doing the same thing. And breakout of high yield bonds to new records, in my mind, means a bullish divergence. So in other words, S&P 500 will be catching up to the high yield bonds. So credit market seems to be thinking that everything is just fine. Do I agree with that? I don't have enough. I don't have enough, economics education to sound. What's the word? To sound authoritative on this opinion. However, judging from purely technical analysis, and that's what I usually just do, the correlation is high between high yield bonds, like I said, and hidden junk debt, hidden high yield all-time highs is a good sign, in my opinion. So high yield bonds are moving higher. I think stocks are going to be catching up to high yield bonds. In fact, let me just show you XLU utilities. Utilities are currently leading stocks. You see, notice this bounce that occurred from April 16th. This is utilities borrow a lot of money. They rely on low interest rates to finance their operations. So what this in my mind means is that interest rates will be coming down. Lower interest rates seem to be good for stocks. I'm not going to argue with that. It's, absolutely makes perfect sense. So high yield bonds moving higher, stocks moving higher. I think stocks could easily hit records in the next few days to few weeks. Let's watch. Copper. So right now we're looking at copper futures. Let's look first at copper futures on the weekly time frame. And I have shown again this chart in the past. So copper, so for example, here notice that high yield bonds, notice how this correlation down below here, it's very positive. Okay. Correlation between copper and S&P 500 is a correlation between copper and S&P 500 is not as good. And if you go back far enough, it's just pretty wild, all over the place. However, there is a general consensus that higher prices for copper is a good indicator for stocks. And right this instant, copper indeed is moving higher. In fact, copper began this latest leg of its rally. We can argue from where this rally started, but for our purposes, copper started moving higher. This latest breakout is right there that occurred in March of this year. So there it is on March 13th of this year. So you had opportunity to buy. What did stocks do at that point in March of this year? They were already at highs, but then we pulled back a little bit. So while the stocks were pulling back, copper actually was rallying. So for me, in my mind, this means a couple of things. Copper is used for industrial production and building. A lot of copper is used in pipes in the buildings. So are we going to finally see the end of Ukraine war and rebuilding effort? That would be ideal. And it would also imply that copper traders of futures are anticipating a higher demand for copper. Or an alternative scenario, a much worse one, is that we're going to see supply disruptions of copper and potentially higher prices because there's going to be less copper available in various parts of the world. I truly hope that what we're seeing is a indication of potential future demand for copper. So copper is used mostly in construction, not destruction. Yes, I know there are warhead penetrators, for example, for anti-tank grenades, anti-tank weapons that use copper as its warhead. It superheats the copper, and once it hits the armor, it will penetrate the armor, and everything inside just burns. So yes, copper is used in weapons, but a lot more of it is used in construction. So hopefully that we're seeing demand for copper rise because we're going to see rebuilding. And potentially there is also a China wild card. Who knows? Maybe the Communist Party decides again to build a whole boatload of various cities that nobody lives in, but they will need to use the copper. So I'm cool with that. Which brings us to the next topic, which is China. In fact, just the day before yesterday, United States has imposed sanctions on about on several, I think like 20 Chinese companies for dealing with Russia, for aiding Russian war efforts. Chinese stocks rallied. Okay, how do you explain that? How do we explain the fact that when a country is being sanctioned for doing business, their stocks rally? So this is another reason why I do my very best to avoid fundamental analysis, to sound very, I don't know how they call it, authoritative and knowledgeable about various fundamental perspectives, because they sometimes just make no sense. How would you describe this? I don't know. So I don't really care why that is happening, but what I'm seeing is China has broken out into a new uptrend. Okay, this is an actual breakout. So maybe we'll get a small pullback, but I think the road is now open to Chinese stocks going higher. All right. Putin is scheduled to go to China, I believe, on the 7th of May, right after his fake inauguration. So I wonder what are they going to talk about. Was most likely Putin will try to convince Chairman Xi to not go with American efforts. Can they succeed? I'm not sure. I think China is more dependent on American trade or Western trade than on Russian trade. The percent that Chinese companies get from exports to Russia is, I think, smaller than exports to US and the other parts of civilized world. And I do mean Russia is not civilized at this point. Anyways, what's happening? I think this is good news. So China moving higher, copper moving higher. What's happening? Yes, maybe we're going to see another effort on the Chinese part to build more stuff. We'll see. Let's move on to the Forex universe. We're currently looking at US dollar. So what's dollar doing? Dollar is currently in a new uptrend. Okay, so notice this up arrows. This is, for me, this is really all the information I need to know. Is when the stock closes above the blue line, we will imply that stock is in an uptrend. We will ignore all bearish setup and only go for bullish setups. So alerts were sent. This is actual alerts to my subscribers. Notice that we had a pretty sharp pullback for past 3 days. Okay, gold really didn't take advantage of this sharp pullback for dollar. So gold is traded in US dollars still. It's XAU divided by USD. So this DXY, the dollar, has been moving lower for the past 3 days, and gold really didn't take advantage of it. If the dollar is getting weaker, shouldn't gold move higher? It didn't. So this gives me, I start to wonder about gold and the direction of it, especially if dollar has weakened pretty dramatically over the past 3 days, and gold didn't really do anything. It just stayed sideways. So normally when we trade, this is gold versus US dollar. So notice the correlation coefficient. More or less, it stays in a negative territory. In other words, when gold goes up, dollar goes down. Vice versa, if dollar goes up, gold goes down. That's just like a normal relationship. However, on occasion, we have abnormal relationship between dollar and gold. And indeed, this is what we're seeing right now. Currently we have both gold and dollar going up. Notice that this current correlation is actually 70%. So in other words, when gold, in this case, where gold and dollar are doing more or less the same thing. However, I think a normal relationship is about to reaffirm, and I think if dollar is in an uptrend, gold could be under pressure, and this is the reason why I drew in this dotted line, put a couple of question marks here, is that there is quite a bit of significant amount of chance that gold will move lower in the next few days to weeks, forced by the strengthening in dollar. Will this actually happen? We're about to find out. Additionally, this run up for gold technically began somewhere in February. I think had to do with general instability and instability in the Middle East in particular. And perhaps this pullback now implies a lessening of tensions, and I certainly hope that's what we're about to see. So, in this relationship, I think I would trust dollar at this point more than I would trust gold. I want to see the relationship that I just talked about, where we have gold and dollar moving in opposite directions, reestablish itself. I think this is about to happen in the next. It's very unusual. See how high we are? We're at 71% currently, and normally this forays into positive territory and just about there. Okay, this is data going back to 2004, so this is 20 years worth of data. So I think we will see a reestablishment of normal relationship between gold and dollar in the next few days. Gold will come under pressure, I think, as a result. All right, let's move on to cryptocurrency universe. Here's Bitcoin. So up until recently, we were buying Bitcoin. This is upward facing arrows. Bitcoin broke out into a new uptrend in February of 2023. How do I know? I have my indicators and I don't need to think. Okay, this is Bitcoin in 2023 here in January. Notice it started moving higher above the red line and finally broke out above the blue line right there on 15th of February 2023. At this point, this is all I really needed to know to say that Bitcoin is now in an uptrend. We were buying Bitcoin. Notice this upward facing arrows. I actually personally bought it myself. I got stopped out of it eventually. There was another leg up that started back in January of this year, and now we're coming back down to earth. Okay, question is, when we hit this blue line around 55,000, should we be buying Bitcoin again? And I am not 100% on that. We will just need to look and see what happens. I mean, currently Bitcoin is still in an uptrend, so if we hit 55,000 mark, and so basically what I'm looking for is something like here. We have a move towards the blue line, a move below it, and then a move above it. So this is the kind of thing I'm looking for. Move below it and move above it, and this is our signal, basically. So when or if we get to this level of around 55,000, we will need to make a decision. Do we want to be buying this Bitcoin, or do we not want to be buying it right now? We're very close to that level, so I would be watching 55,000 as a very important level in the next few days to few weeks. Looking at Ethereum, the correlation between Ethereum and Bitcoin is also quite high. So again, upward facing arrows, basically similar patterns. A huge run up here between between January of this year and March. Again, I think this has to do with general instability, war in the Middle East. Just people are freaking out. Now we came down. Notice how much we came down. We touched this blue line already, so this previous I did not send this alert, but if you had my indicators, you could have traded it. So technically speaking, okay, Ethereum, there is a question mark. I didn't say buy. Okay, do we want to be buying? Do we not want to be buying Ethereum? So Ethereum is already at around 3,100, and this is basically the level that we want to be looking to buy. My question is, are we done correcting? And I'm not so certain, especially with Bitcoin, like I just showed you, not yet down to where I would be even considering buying. I think Ethereum could easily continue lower. And if Ethereum continues lower and gets to this red line at around 2,400, then it will flip into a downtrend, and we will be thinking about selling it. So this is a conundrum we have. I definitely want to wait for Bitcoin to be sufficiently oversold, and then I will want to make a decision just based on patterns, because really there is no fundamentals to Bitcoin except for, I mean, they talk about this halving of Bitcoin, and I don't know about it. I mean, everything is on the chart already. There is no need to know anything about anything. We just need to know, do we have a good pattern? All right. And so we're waiting for Bitcoin to complete its pattern, to get down to around 55,000, and for Ethereum, well, we'll just need to wait and see what happens. All right, guys, what do you think? Make a comment. I want you to let me know what you think about Bitcoin and Ethereum. Should we be buying it right now? Should we wait? Should we do nothing? Should we just avoid Bitcoin altogether? What do you guys think? Is gold and dollar, what is the direction for gold and dollar? Will gold rally? Will gold continue lower from here? What's the dollar going to do? I'd like to know your opinion. Same goes for China. What's the reason for China and for copper, for that matter, to be moving higher? And copper really took off. So make a comment below. And do you think high yield bonds leading stocks higher is a prelude for stocks hitting all-time highs? Let me know what you think. Other than that, head over to MasterChartsTrading.com. Click on sign up for one of the products. So I have trading indicators, these lines on the chart. You can trade pretty much anything on pretty much any time frame. There are some rules that you need to follow, but yes, they're really simple. Once you have my indicators on your chart, you will be able to trade just like you see on this chart. And these indicators are currently available for tradingview.com. Eventually, we're going to be converting them to another, I forgot the name of it, but I'll get to it. There's going to be some conversion of indicators to another platform. The indicators is what you see. $24.95 per month if you sign up for a yearly subscription. If you go for a monthly subscription, it's $29.95 per month. So if you pay upfront for a year ahead, you will get 2 months free, 17% off. I also send out the daily newsletter and the weekly members only video. That's newsletter at $33.29 per month if you sign up for a year, and at $39.95 per month if you sign up for monthly access. And of course, the best deal is to get both trading indicators and newsletters. For example, this week we'll be covering all of these various securities, including large cap stocks, various speculative securities, as well as gold related ones, so that one is $49.95 per month if you sign up for a year, and $59.95 per month if you sign up for monthly subscription. I think it's a good idea. All right, let me know if you guys have any questions. Please don't forget to hit the like button, subscribe to this channel, share this video. I thank you very much for watching all the way to the end. Again, thank you for watching, and have another great trading week. Bye bye.